Good morning, afternoon, and evening, traders from around the world. I hope you've all had a fantastic week so far in week 9, and you're ready to rock and roll going into week 10. First things first, take a look at all the things going on this week between news, events, holidays, etc. And, well, I say that like there is actually things going on. First of all, we don't have any holidays in March, so there's nothing really to worry about there. From the monthly perspective, there's nothing to worry about, so we can get that out of the way. As far as the news calendar for this week, well, realistically, the news calendar for this week has not much going on. There's no news on Sunday, Monday, or Tuesday, and there's no news on Thursday, Friday, or Saturday. The only day that really has news is Wednesday, and that's starting off at 8:30 with the CPI and core CPI, and then at 10:30 inventories for crude oil, and then the 10-year bond auctions, which lately are being a little bit more important with everything going on. But that's it. So the news calendar, the event calendar, everything really, really calm and quiet. All right, well, with that out of the way, one other thing to keep in mind going into this week, Friday, I will be out. We're going on a small little family meetup, so I won't be here on Friday, so there won't be any briefings or anything there. But that's really about it. So with that out of the way, now we can jump into some charts and everything for the week ahead being week 10, going into 2021. Over on the NASDAQ first, we've got a very nice looking descending wedge working its way lower. We've broken below 13,000, which realistically was the big brick wall for a long time. It was, I guess, closer to like 12,800. Either way, we've broken through that area, and now we're actually using it as resistance. And although the market hasn't really made it back up to the top of the wedge, we're still seeing rejections and short aggression out of this L1 to continue pushing the market lower. So with this overall movement to the downside, one big consideration for a lot of traders from a value perspective, traders who are looking to buy on the cheapest price possible, well, we just had a double measured move on the impulse leg, which effectively almost to the tick bounced this thing off the low. Realistically, that does show, at least, that there is a lot of support down there, well, at least on the first test. When the market comes back down and re-hits that area, that's where things become significantly more interesting, because then we would be confirming a three-press wedge in the lows of a larger descending wedge as is. Almost perfect structure in that sense. Next up is the S&P with this just incredible breakaway move to the upside. The initial rotation all kicked off of a deep L5. It never broke the lows, rotated off the L5 and went crazy higher. And from there, it's just spike and channel up. It spiked up and channeled higher, and you could really draw this up a couple different ways. The larger kind of channel doesn't really come into effect until we put the bottom in way over here in January 30th or so. So realistically, a lot of traders will have had the channel looking something along the lines of this. That would have been the original spike in channel, and you can see how a lot of that price action is still holding inside of there. But it does appear to have widened out to a larger scenario. Typically, when we have a higher low reversal that doesn't break down like we had over here, and it holds off of an L5 with a big push to the upside, the next pullback is very typically going to be an L2. It missed it by just a hair. So to say that it's there's a lot of traders who are probably waiting down there would be an understatement. The big concern, though, is that we might not be able to make it back down there. There's a lot of trapping that happened down in the lows. It came, even sniffed the top of that thing, and it was gone. Went back lower, big trap underneath, big trap underneath, big trap under. I mean, there's huge wicks on the lows displaying a vast amount of accumulation. It's just not necessarily likely that it's going to get back down to that low again. And speaking of multi-tiered channels, gold really throwing this one. We've got the overall larger channel working its way down, and this is very much zoomed out. I mean, we're going all the way back to July here. So this movement to the downside has had some very deep corrective phases. We had an L4, which eventually broke down into an L3, which broke down into a huge L3. Now we're looking for more continuation for, guess what? Repetition. The market seems to be loving these L3s. Why not come back and find another L3? That places a lot of resistance back at the top of a lot of, just a huge brick wall of orders up here. That's at that 1875 or so. And depending on when it gets there, we've got a couple different channel lines to work with. Obviously, if it shot just straight up, then, we've got this one. But realistically, the one that lands the best is going to be right over there. And that is where a lot of the interest starts setting in for gold sellers to try to push back down again. Now, if we zoom in a little bit closer than from the stratosphere here, we can see that in the near term, we're at the bottom of the wedge, bottom of the channel rather, creating a wedge, which is a very nice indication that the market's trying to find a bottom. Doesn't necessarily mean it has to right now, right? But more realistically, it's starting to display that it's having a hard time. The lows that it's going to make forward from here are probably not going to be much lower. And the highs that it makes from here are probably going to be a little bit higher. They're going to begin transitioning into more of a range in the nearer term, unless it really starts going crazy and breaking lower. If it starts breaking lower, then maybe we've got some really wild trend going on in our hands, which is looking for this wedge low not too much further. And then over on crude oil, which is apparently the absolute king of overextension right now, just screaming to the upside. The one thing that we've got going on here is obviously the market is incredibly bullish. It's gone screaming away from the $34 mark with a full reversal all the way back up towards nearly 70. Buyers are interested. I think that's pretty safe to say here. But the big concern is being interested way up here. That's the tough spot, right? Way up here, we've got too many problems. There's potential twin reversals. There's a massive overextension. All of these things would suggest that the market has gone too far too quickly. It's an unsustainable type of move. It's not healthy. It's not that the market can't keep going. It certainly can. If we look at the overall move to the upside, you could see that there is a potential for a narrower kind of trend channel that, or even a megaphone, I guess, kind of cutting across the highs of it. And they're sort of gunning towards the top. If we take it off and draw it as a channel, just kind of visually, we're right around the high of it. So there is definitely other factors that are stacking in here that would suggest that a high is being put in, but that would also suggest that we need a bit more of a pullback. And buyers are going to be hunting for that pullback. They're not going to want to buy way up here or way up here. They're going to want to buy down at the channel lows where we've got structure, a blow off of the channel lows because it blew off the highs. They're going to look for an equalization on a pullback just like they had on the highs. They've got to kind of make this thing a bit healthier here. It's a bit too far up. It's got to pull back. On the euro, we have a very nice pull down into a potential wedge low. That wedge low is also lining up almost perfectly with a bullish L4, which is stacking up on some pretty nice structure from before. There's a lot of things hitting down here. Along with that, we do also have an impulse measured leg lower, which would be a completionary move right around that 1.185, a little bit above that, maybe 600. It's a lot of things completing here is what I'm getting at. And with that kind of move, there's one of two things that are going to happen. We're either going to find a base on the shallower wedge low, or we're going to try to find a base on a blow off. We're in the zone of support, but it doesn't seem like we're getting any support. So with that lack of support, we'll probably rifle through the lows and find a wider target. What more obvious wider target than the potential wedge low that's just waiting to happen right there? And that is gearing up right there. And that would be almost smack on top of an L5 at the base of that previous swing low. I mean, there's so many things that, although there is a lot of support here, and that's why I wanted to talk about it, because we could bounce here and we might not even see this move down. But be prepared, because if they do swing lower, there is a huge zone of interest just a little bit lower. We need that good blow off first. Next on Bitcoin, we've got a bit of a wedge forming here with the market trying to support the L2 to the upside. We're not really getting a whole lot of movement one way or the other. I mean, the big thing that stands out is we broke above 42,000 with a heck of a lot of conviction. And it really hasn't pulled back to test it. It came close. So it's somewhat of an open swing gap where you could measure from the lows to the highs, and the closest the market came to that point was right there. Well, this distance in between here, that's an open gap. The market has not filled that price action in, and that can suggest upside objectives. So if we're looking for upside objectives on this pullback, then realistically, it would make a lot of sense to see a continuation move at a 1-to-1 completion that would place targets at around, eyeballing at 57,000. That would be the realistic objective right now, as long as this main overall gap stays open. Now, there are a few other things that are going on, obviously. We've got a pretty big brick wall of divergence across the highs here, where the market went ripping higher. And, well, the MACD said no thanks. But we're finding a decent amount of support here. We had a nice little short-term, very short-term wedge. But that wedge broke out aggressively higher, holding back on top of the L2. Everything's lining up to be a bullish bounce attempt back above 50,000. The big problem is, of course, 50,000. We're running into it like it's a brick wall, and it's having a very hard time getting above it, and that's going to be the next thing that has to happen before Bitcoin can go rallying back up towards 60, 70, 100, go crazy. And then finally, over on Ethereum, we have a nice corrective phase to the downside. That corrective phase, I'm looking at this to extend one more time, or at least that would be the preference. I know a lot of longs don't really want to hear that, but realistically, we're not really coming off of anything. We've got a lot of short-term support here, but the big support, the value support, everything that was there, we've broken. And they're using it as resistance. So it doesn't make a whole lot of sense in my eyes to be a buyer here. I would much rather wait for at least a pullback to a deeper level of support, something that lines up with the previous swing. You've got previous structure. You can see what I mean? Makes a lot more sense being a buyer down here. If it's going to pull back a little bit lower to the ultimate support, the big honking one that's been waiting there for ages, well, that is going to be down there, and depending on when it gets there, it's going to be closer to around 11 to 1200. That's the one that a lot of traders are going to be waiting for, and that's the one that I am definitely going to be keeping my eyes on. Something else that's kind of standing out now that we got a bit more price action could be a little bit more of a wedge on the bottom. You can also see that they might have already tried to complete a wedge, but if it does want to go back down, it's a little bit later, but it does line up over there for another potential combo bounce down at the lows. All right, well, that's going to do it for this week. Like we always say, stay safe out there. Keep those stops in play and let the winners run. I hope you have a fantastic trading week in week 10, and we will see you all in the next. Thanks. Have a good one. Bye.